Hello, everybody. Welcome back to our weekly episode with JOMO, weekly market update and AMA. How's it going, JOMO?
Hey, CM, everything is fantastic. How about yourself?
I'm good, man. I'm good, man. Looking forward for the Bitcoin big move that should come soon. What do you think?
All right, yeah, let's dive right into a small update. Your question is something that I'm dabbling about. Well, what I'm seeing in the market right now is a very choppy, hard penny environment. I'm seeing that ETH and BTC both are painting this type of possible wedge. And you know that ETH already touched the 150 DMA. So we are at a danger point. We have this conjunction area, resistance area, again, with the 150, with the 200 over here. So we might need to consolidate sideways maybe a little bit, or maybe do a small correction, as we already talked about in the past, maybe the correction to the 50 DMA or just something, going sideways. But that is what I think is building right now. But yeah, just a hard penny environment. But that's a good thing, because while we have a hard penny environment, the disciplined and the patient like us are waiting at the sidelines, just like a cheetah, for the move to come, and we will be there waiting for it, and we'll catch it right from the bottom. Now, I know that we are already bullish. We already said right about this area around mid July. We already told everyone that we are bullish short to mid-term, so everything is occurring as planned. Now, I will tell that while we consolidate on ETH and BTC, we can consolidate for a few days, a few weeks. We can correct a few days, a few weeks. However, if we maintain strong, what will happen is rotation between coins. Now, as you can see, guys, we have new coins that are getting some love. SHIB is getting love these few days. You know that CHZ, for example, is getting love for a few days already, a second leg up. You know, the Unify got some love, and more coins are going to get this kind of rotation type while we wait for BTC and ETH to pull up the engines and really speed fire that move that we're anticipating to come, whether it comes in the coming days, weeks, or maybe even longer. But in the meanwhile, we can have a good run. But specifically, we have different coins each day or each couple of days, so we don't need to fall in love with them. Take profits fast, move to the next one, right? That's what you're thinking as well?
Yeah, absolutely, man. Quick trades, take profits, and yeah, move to the next.
Exactly, that's what I'm thinking.
All right, so now we're gonna move to the questions of the day. We have some questions from the trading group. The first one is, why do you never take leverage trades? You know, my group members always ask me, man, bro, we should use leverage, and they always want to use leverage. So what do you think about it, leverage trading?
Well, that is a very good question, CM, and I'm happy that the participants of your group are asking and quite curious about it. So I would tell everyone this: I don't use leverage unless we are in the really strongest bull market. Everything is popping, everything is working. You can't lose whatsoever. Only then I will use leverage, and I will use it only on FTX, because FTX leverage isn't per trade, it's per account. So let's say hypothetically you have $100,000 account, you can 5x it, so you have $500,000 account. So that's how FTX use leverage. I don't really like using a very specific leverage for a specific trade. Let's say you have a trade, you want to put $1,000 for it. Some people like to leverage the trade specifically. I don't like it. I don't like how it is psychologically. I just like to put the right amount of position size. So whenever people use leverage, that means that they don't know exactly which position size they want to do. On the one hand, they want to feel like their position size is small, but on the other hand, they want to feel like their gains can be multiplied. But you know what they forget, CM? They forget that the risk is multiplied as well. So it's very much the same as just putting a big position with the same risk. And that's not how I operate. I'm not trying to play games with my mind. I know exactly the position size I need to do in every different market, and I just use that optimal position sizing, and I don't try to leverage. And you know what? Just leverage. It's just a game. It's just like someone that feels like a gambler when he goes to play at the casino, at the roulette, and he feels like he's getting lucky, and he wants to, I don't know, put everything on red because it feels like the best chances. It's just a feeling. It's just psychological. I would not recommend using leverage for individual trades whatsoever. It doesn't give you any real added value. Use the correct position size that fits your style and fits the market that you are in, and of course the streak of wins or losses that you have for that specific moment. That's how I do it. And how about you, CM?
Oh yeah, man. I have a lot of experience with like people that you know that were in my group, and they were trading leverage and they got wiped out in a bull market. Okay, so once you see people getting wiped out, completely wrecked in a bull market, man, you know, in the DeFi season and in the meme hype, you know, how can you get so? When you use this leverage, I think about the leverage as a monster. It's like smoking cigarettes. It's a monster that always, when you start feeding these monsters, she will always come back. Why don't you put some leverage? Why don't you put some leverage? Put some leverage, bro. Put some leverage. Yeah, add some leverage, and then you get addicted. You get it. It's actually, you know, how do you get tempting it? It's like a hot woman tempting you to a trap. And then bang, you go grab a beer with a friend, boom, you come back, you wiped out. You don't have any money, and maybe you owe some money to the exchange. I don't know, man. But you need to sell your house or whatever, man. Man, this is not appropriate. It's not necessary. And the leverage, I think that it was designed for like forex trading and in markets that move very, very slow. And they want to speed up the gains. So, okay, sure, because the thing is moving 1% and it's a bull market. But in crypto, you don't need it, man. Things pumping 100% in a day. Why the hell do you need the leverage, man? Leverage, it's the monster of greed, and it's a trap. And I think we should all avoid it because it's just a trap to take your money, and it will take your possibility of survivability for the long run. Because people that got wrecked by leverage, like in the DeFi summer, they completely rage quit crypto and they miss the meme hype and the Galash trade and all the amazing trades we have, man. So really, just to sum it up, man, don't use leverage. It's not a good thing, man. It's addictive, and really, you don't need it. You don't need it, man. You don't need it.
Yo, CM, you just nailed it. You nailed it. A perfect answer. Just down to earth. That's the complete truth. And as you said, it's just not necessary. It's an addiction for your greed, and that's the opposite of what you want to do. You want to tame your greed. You want to tame your fears. You want to operate consistently, the same position sizes. You want to operate again and again, improving upon yourself and not falling into that traps of our own psychology. Very, very well put answer, and good one, Sam.
Yeah, and one more thing I'd like to add is if you have a very, very high probability trade that everything lines up in one thing, like in the one direction. Let's say we had the Shiba pump in October or the Gala pump in November. So once we had these pumps, I went super heavy. Okay, so you can start with 25% of your portfolio. But only these trades comes like once a year, twice a year maximum, okay? And you want to be very, very picky. But this is like leverage trading because you put huge position, you put your stops, and then you just shave your position. You shave it on the way up, and it really gives you the same feeling of leverage trading without the greed monster.
Yeah, 100%. I like it. I like the way that you do your techniques. Very good technique. And again, you just don't need to feel like you need to leverage anything. You can just operate with your own amount and make what CM does, and you'll make it. That's it. No need for it.
All right. So let's move on to the next question. We have a question for you regarding Elliott wave theory for trading. What do you think about Elliott wave theory?
Okay, that's a question that I have a good answer because I do take into account, all right, as a macro way to look at assets I use Elliott wave theory. So I don't use it. I used in the past to pinpoint trades, but I don't use it anymore to pinpoint trades, and I will explain why. So the Elliott wave theory is a theory, again, based on how the psychology of human minds work, right? We do the same things again and again, and it manifests in different ways. And in the market, one of the ways that it can be manifested is with this Elliott wave theory. And in our last video, I talked about how in 2017, and I will just put it over here for a second. How in 2017 we had it occurring, right? So, this is not a good chart for it. 1 second, and I will just show it for, okay, Bitstamp over here. We had it, okay? In 2017, it occurred many times, and before that as well. Why? Because we were mainly dominated by let's call it dumb money, right? Not professional investors. So Elliott wave theory would say that we have 3 waves up. So this is 1 wave up, this is a second wave up, and we have a third wave up, and in between we have waves down, right? So this is a wave down we had over here, and we had a wave down over here, and then we had this big correction before another cycle starts. And you can get into it with cycle within cycle. You can say that some people would say, all right, now that we finish this, all of this would be 1, for example, and now all of this would be 2, for example, and now that we add this one, this would be 3, for example. So whenever dumb money, all right, and I'm just saying it as a phrase, is dominating the asset, so it can help you pinpoint entries. But whenever some smart money starts to take over, so not anymore. However, you can view as in a macro way. Okay, what's happening? Am I late to the party? Am I early to the party? Are we just starting a new move, and so on and so forth? So that only for taking the big picture into account, I use a bit the Elliott wave theory, just as a small way to look at stuff from a macro view. What about you, Siam?
Same, man. I'm just like you, looking at it on the macro, try to understand where I'm standing, if I'm in the 3rd leg, if I'm in the 5th leg, if I'm in the 1st leg. The problem with Elliott wave is sometimes your count is garbage, so you didn't count it well, and then you end up in a bear market, losing your panties. So
exactly,
everything is with a grain of salt. But I do like the ABC corrections. I do like the ABC corrections, because when you get an ABC correction right, you nailed you are nailing the bull market. But the Elliott wave theory, I prefer just to use the 200-day MA and the 50-day MA, and once they break in above the 200 and the 50, man, that's a bull market. You don't need no Elliott wave and no nonsense. You just you know it when it's coming. You just know it.
I totally agree. I just look at it at a macro, as you said. But again, what you said is just perfect. The 200-day and the 150 MA, whenever they start going upwards, that's when a new bull market starts. So you just need to, the MAs is just a much better way to view and to enter much more perfectly and smoothly into a new bull market. It doesn't matter if it's crypto. It doesn't matter if it's the financial markets. It's all the same. So I completely agree with you and operate the same way. So if someone would tell me, can I ditch it and not look at the Elliott wave theory, I would say yes. The only reason I do have it in my frame of mind is because early back in the days, I used to kind of work with it, so it's still ingrained in the way I think, but you don't need it whatsoever. The MAs that CM just told you about is a much better way to operate.
All right, and we will go for the final question from the Elliott wave subject is, what books do you recommend?
Yeah, well, me and you, we have some talks about this. We love books. So I would say that one of the best books that I always would recommend to someone to read, it's a very easy read, is How to Profit in Bull and Bear Markets by Stan Weinstein. And I think it's a perfect book for everyone. If you're a short-term trader, if you are a longer-term investor, mainly if you're a longer-term investor and you just think everything is going to go up in the long run, and you think that charting maybe is not as important, mainly for you. If you don't think that you can pinpoint entries and exits in the long term, even if it's a year or two, so this is a book for you. I know you like that book, right, Siam?
Oh yeah, it's my favorite now. It's my top book, man.
It's your top book.
Yeah, it's my top. I have nothing better. I read, we recommended, Market Wizards and all the Mark Minervini
Yes.
collection, obviously, and
Of course.
William O'Neill, how to trade with stocks. Just write William O'Neill book. But
Yeah.
Stan Weinstein make it so easy to understand the stage analysis, the way they move from stage 1 to stage 2 to stage 3 to stage 4, and it's actually helping you understand when to go long and when to go short on the macro picture. It's amazing, and the breakdown, or the breakout of the 200 MA is the best buy or sell signal, ever, man. Ever.
Yes.
Ever, man.
Yes, 100%. It's a fantastic book, and it's a real easy read, and both for traders and mainly for investors that think that they can just hold something for forever and it will go just up forever. Even if it does go up forever, why wait with an asset while it's 70% downtrend? Even if you're in profit, let's say even if you bought Bitcoin at $3,000, right? You nailed it. You nailed $4,000. You nailed Bitcoin $4,000 on on the COVID crash. You held it all the way to 69, and now you hold it all the way down to 24. You're still, I don't know, almost 8x up. That's a lot of gain, but you are double that, right? So why hold it all the way down? And what me and CM are trying to say is, if you read the Stan Weinstein book, you will learn how to escape those downtrends and get back in when new bullish environment is starting. Isn't that much better than just holding all the way down? What do you think, CM?
Absolutely, man. Absolutely, man.
Absolutely. I have one more book for traders that want to understand better the technical aspect. It's a book I forgot about, but I reread it lately. It's by Giller, all right? It's how charts can help you in the stock market, all right? By Giller. Let me see what's the full name of him. I forgot. Where is it? Oh, yeah, over here. William L. Giller, okay? So it's a fantastic read, very easy read as well. And it takes you into the technicals that just stood the test of time. This book is from the 60s, all right? But it has the best patterns and why the patterns reoccur again and again, all because of the supply and demand, of course, forces. And it's just an easy book, really good read, and it really takes you to another level of understanding why the things that happen on charts happen, and that helps you make good sound decisions. So that's another recommendation for investors again, but mainly for traders that really want to dive into it.
All right, man. You send me the name, and I'm gonna write it down below the post. And do you have anything else you want to add?
Well, that is it. I think we had a nice so far and a good episode, and well, I'm excited for next week.
Yeah, definitely. Well, guys, thank you very much for watching. Leave a like, subscribe to the channel, and also leave a comment down below if you have any questions you want to ask JOMO or myself for the next episode. And thank you very much for watching. See you in the next one. Cheers.
Cheers.